I'm going to show you how I analyze my trade in this very video using just 4 steps. Going to the higher time frame, knowing what price is on the higher time frame, and then using that overall information to know what to do on the lower time frame. I'm going to show you all of this thing to you using a live trade example on gold. But before going to that, if you're seeing me for the very first time, my name is Divine. What I do here is document how I trade and make videos that improve how you approach trading. If you want to see something like this video, subscribe and drop a comment. I'll be right back. Now, for me to simply show you how I analyze my trade, any pair at all, I go through 4 steps. The first step is simply to understand where price is going to on daily time frame. And how I do it is simply by using support and resistance. Let me show you. I want to simply use support and resistance to understand where price is going to. In this case here, for us to simply apply support and resistance, I'll have to zoom in properly and see the overall swing low and the overall swing high of the particular pair. In this case here, you can see that this is the overall swing low I can see, and this is the swing high. So for me to draw my support and resistance, I can even choose to draw it from here or from here. Whichever one you choose to is still valid. But if I'm to draw my support and resistance, you will see that here is a valid support, right? This is a valid support. Now if I choose to draw it from the overall one, I can see lower here. You will see that here is also a valid support. So whichever way you choose to draw it, most likely you arrive at the same thing. Now let's work with this particular one that is here. Now because I've identified my support, for every support there has to be a resistance. In this case here, the only resistance I can see at the moment is simply here. This is a resistance. And on this resistance, there's 1, 2, 3, 4 touches, right? 4 touches is currently on this resistance. But remember, we want to simply identify direction of the market. Now because we've identified support and resistance, in this case here, we're always seeing support because the resistance that was here has become support. Support is still acting as a support. That means price is in a strong uptrend. But because price is in a strong uptrend, we won't just be buying. We want to identify a good point that will join price to continue to the uptrend. In this case, for us to simply identify this good point, we want to simply identify key levels. And now this is applicable to any currency pair. Gold, Nasdaq, any currency pair. We want to simply identify the key level that we'll use to simply know where we are going to join price from. And in this case, the last point that price touched on the trend is referred to as the what? The key level. That means here is the key level. And the current place price is key level. That means the current high price got to is also a key level. So in this case, we identified two key level, support key level and the resistance key level. Now our interest is to identify where we are going to join price to continue the uptrend. And for us to simply identify where we're going to join price to continue the uptrend, we want to simply go to the 4 hours time frame and understand market structure from these key levels. Now, market structure would help us understand how price is moving and how we can move with price. In this case now, let me zoom out properly. What's going on? I didn't plan for this. Okay. But let me just put it back to you so we'll see what we're doing correctly. Now the reason I zoom it back is because remember we want to identify the market structure from this key level to the current level price is. And in this case here, if we are to identify the market structure, we'll see that price has been on an uptrend. For example, look at this point there. From this particular low here, price gave us this high, gave us this swing low, gave us this swing high, gave us this swing low, gave us this swing high, gave us this swing low, gave us this swing high, gave us this swing low, give us this swing high, give us this swing low, and give us this swing high. Now the point is this. Once we identify the market structure, we want to identify the last swing low and the last swing high. In this case here, here is obviously the last swing low, and the key level is already acting as the last swing high. Are you following? Now, because we've identified market structure, the next thing we want to identify is simply supply and demand zone. And there are various types of supply and demand zone which I've explained on this channel. But let's identify the ones we can see. Sorry. Let's identify the ones we can see on this very chart now. Now, the first supply or demand zone we can see here is simply here, right? This is the first supply and demand zone we can see here. The reason why here is the demand zone is this. Price was acting as a supply zone here, and then price failed. Now, because it failed, it becomes a what? Demand zone, right? So here is the first demand zone, and here is also a demand zone, and here is also a demand zone. And now mind you, the reason why we're identifying demand zone is because price is in an uptrend. That is the reason why we identified, sorry, that is the reason why I identified the demand zone. That here was first a supply zone that turned to a demand zone. And here's a demand zone, and here's a demand zone. Now, had it been we are meeting price at this point here, we'll be looking for price to fill this particular one first. Then we'll expect price to buy from this particular one here. Now, the point is this. For us to identify how we can join price to where price is going to, which is the upside, we are working with this particular zone here, the supply zone that turns to a demand zone. And for us to work with this particular one, we'll have to go to the 1 hour time frame and refine it to become a point of interest. Remember, we identified market structure here and also identified supply or demand zone. In this case, demand zone because price is in an uptrend. Now, on the 1 hour time frame, our duty is to simply refine this zone that price gave to us to become a point of interest. That if we refine this zone to become a point of interest, then we can expect price to simply buy from that particular zone. In this case here, if we are to refine this zone, we are most likely going to be using here to refine this very zone. So here becomes our point of interest because here was acting as a supply, and then this point filled the supply, and this point becomes a point of interest. Now, because we've identified the point of interest, we also need to identify liquidity that will make here to hold. In this case, here becomes the liquidity. Here becomes the liquidity. As you can see, we identified an equal low liquidity. Now, because we have identified the liquidity, our interest is for price to come to this point of interest, and then we look for a buy. And currently, price has gotten to the point of interest. That means there's an opportunity for a buy. But because price did not meet us at the point of interest or we did not set a limit, we want to simply from here identify how we can join price. And mind you, this is a live trade and I'm analyzing it on Monday, the 19th of May, and the time is 8:16. Now, what I want to do next now is to simply understand how I'm going to join price from this point of interest. And for me to join price, it has to be on the 15 minutes time frame. On the 15 minutes time frame, I'm looking for three things: the structure, the liquidity, and the point of interest. And in this case here, the structure is simply going to be this low that was created here. Sorry, let me just very well. This low that was created when price tapped into the point of interest, right? This is the structure. And this high that was created at this point here. So this is swing low and this is the swing high. Now from this swing low and this swing high, we want to simply identify the point of interest and how we can join price to where price is going to. In this case here, here is a point of interest, right? Here is a point of interest. And all of these things here is acting as a liquidity to hold this point of interest. And as you can see, price is reacting from the point of interest. Now, because price have tapped into this point, we're going to expect here to be the low. But this low can only be confirmed if price take out this high that was created here, this particular high. But how do we join this particular trade? For us to join this particular trade now, we want to simply understand how price have moved from here to the current place that price is. In this case here, price has covered everywhere, but price haven't covered here. That means an entry on this particular pair is to simply wait for price to come back to this point and then we'll look for a buy. In this case here, an entry is going to be from here, long. Our stop loss is going to be below here, and we're going to be targeting here as our take profit 1, and most likely 1:5. It's going to be an entry on gold. That'll be all for this video. I will see you in the next one. Peace.